Now, once you have this funding in place, there's another side of this equation, and it was one that I found kind of interesting. Didn't realize how important it was. Whatever you agree to when you put this package together, you have to stay on top of that. This idea of covenants and the review of your performance versus your agreed kind of standards that you're setting when you work with this partner. Talk a little bit about this idea of covenants and the ongoing relationship.
If someone is willing to invest in you, whether it's with equity, meaning they're taking ownership, or debt, they're lending you the money, they're going to want to make sure and protect their investment or their loan, right? So whether it's a private individual or it's a bank, they typically will set some parameters called financial covenants. And these are typically ratios of your performance, right? How much cash flow did you do this year relative to the debt you had to pay? Or what is your, we call liquidity position, we mentioned your current ratio, right? How much in current assets do you have relative to your current liabilities to make sure you're solvent? So there are these financial benchmarks, which is more the reason to learn the numbers and educate yourself on the numbers so you stay ahead of it, right? You don't want to be in a situation where you've defaulted and then you have to come to the table with investors or a bank to try to iron out a solution. You want to be proactive. One thing that I've always done with my clients, whether it was in banking or whether it was in my consulting career, is really talking about, okay, what are the expectations of the bank or our partners, okay? And let's set our parameters and make sure we're testing them monthly, quarterly, and then annually to make sure that everything is satisfied.
Yeah. And Nick, one of the keys for me in that area was whoever your financial partner is, whoever your accountant is, they have to help you understand this stuff.
Yes.
They can't just hand you a report at the end of a month or a quarter or a year and say, here's your financials. And I from personal experience, I had that as one of my partners was an accounting firm, and that was their approach. There was no bringing you along with understanding what does this all mean. And so I got advice to change accountants, and I did, and I found an accountant who, we would talk each month about the numbers, but then we would talk about what do they mean and what is this telling us and where are we going. And that was a fascinating value-added view of who my accountant could be or should be, as opposed to just here's the service we said we provide. Yeah. Here's what that is telling me. Super.
Yeah, it's transactional versus relationship based. And that whether it's your attorney, your CPA, and importantly, your banker. Are they taking a vested interest in learning about your company, understanding the numbers? Because especially your banker, they have to go to their credit officers and their credit departments and explain things. Yeah. So if they're not competent or they don't take the time to learn your business and be able to translate it properly, that could sort of make or break your funding source as a small business.
And that can help you prepare for that meeting that you're going to have with them.